Hi everybody, it's Terry Ryder from Hotspotting, bringing you this month's edition of my live Q&A. Once a month only, where I'm live on Facebook and available to answer your questions about real estate issues. Anything at all. If you're like most people, you want to ask something about locations and location where you may own real estate or are thinking of buying real estate, whatever. Questions about issues in real estate, anything at all to do with the housing market across Australia, feel free to key in your questions in the comments panel. I'll do my best to answer them. I'm not in my usual place for doing it. Usually I'm in my office, but at the moment, as I mentioned in my broadcast for Hotspot of the Week last night, I'm in Mackay in central Queensland. This morning I did a presentation at a live business breakfast, and Harry has just joined the broadcast and says he hopes that I'm enjoying Mackay. I am actually, Harry. Very happy to be here. It's a good place. It's the sort of place that I think we should hear more about, both in terms of the economy of Australia, the lifestyle of Australia, and the real estate markets of Australia. It's one of those places that deserves greater attention. We're not hearing about them in our major media, who continue to be obsessed with the biggest cities, talking about the Australian property market, prices falling across Australia. Well, they're not. They're not falling in Mackay. In most of the suburbs and towns within the Mackay local government area, prices are rising, in some cases quite strongly. In fact, I'm looking at on one of my sources of information on one of my small screen over here to my left. I have information about a suburb in Mackay called Mount Pleasant. In the last 12 months, according to CoreLogic figures, the median price for Mount Pleasant, one of the more expensive suburbs of Mackay, has risen 21%. Not a bad effort of growth in just 12 months, and it's certainly the market leader as far as growth goes. That's CoreLogic figures. I noticed that recently figures were published by the REIQ, Real Estate Institute of Queensland, for the suburbs of Mackay. There's a similar figure for Mount Pleasant, and there's other markets in suburbs of Mackay where prices have grown quite substantially in the last 12 months, more than 10%. Not all of them. It's not even across the board. But what I know to be true from the research I've done in Mackay in the past, and I'll point out that Mackay features in a number of the hotspots reports published by Hotspotting. It's in our national top 10 best buys report at the moment, in fact. The reasons for that, well, over the last 18 months, we've seen a huge turnaround in sales volumes. The pattern quarter by quarter is quite distinct, more so than for most locations in Australia. Significant rises every quarter for the last at least 18 months in Mackay, which is inevitably going to lead to price growth. At the same time, vacancies have been heading in the opposite direction. 4 years ago, vacancy rates in Mackay were around 9 or 10%, and they've come down steadily until the point where they're now 1.4%, according to SCM research. Similar figure out of the REIQ, and local people I've spoken to today have confirmed that vacancies are very tight, that every time they present a new rental property to the market, they get 10 or 20 people competing for it, and also on occasions they're getting people offering more than the asking rent to secure the property for themselves. So that's another indication of just how tight the rental market is, how strong the market here is in Mackay for all sorts of reasons. So here, as I said, I spoke to a business breakfast event this morning, and tomorrow night I'm talking at a seminar for mum and dad investors and home buyers here in Mackay, talking not just about the local market, but about opportunities that they might want to think about right across Australia, because right now there's lots of growth markets in various parts of the country, and not just in Mackay. So if you're out there watching the broadcast, you've got a question about location or some other issue in real estate, please key in your question and I'll be happy to answer it. While we're waiting for the questions to flow through, I've got a few little snippets of information that might be of interest to people. Here I've got the latest figures on vacancies published every month by SQM Research. If you're not aware of SQM Research and you're a property consumer or an investor, it's a website that you should be aware of. It's a great source of information about all sorts of things: stock on the market, vacancy rates, demographic statistics, all sorts of information that's relevant to property investors. A lot of that information is freely available, and we're particularly interested every month in their take on what's happening with vacancies in the major markets around Australia. And just a moment. The latest figures show that in 5 of the 8 capital cities, vacancies have dropped in the last month. So these are the figures for July compared to June, also compared to July last year. So they're showing that the average vacancy rate nationally is 2.3%, so it's the same as it was a month ago. That's indicating that, as a general statement, across the country there's a pretty tight rental market. There's no general evidence of oversupply. I know that there are pockets, individual pockets in individual locations where there's oversupply, not that many. Sydney has got the highest vacancy rate amongst the capital cities, 3.5%. It's much higher than it was 12 months ago. But in most other places, the vacancy rates are actually trending down. Brisbane, 12 months ago, was 2.9%. Last month, in June rather, 2.5%, now 2.4%. Perth, a year ago, was 4%, now it's 3%. Adelaide's been very tight for a long time. It's dropped even further. It's now 1.1%. Hobart has been the tightest rental market amongst the capital cities for a long time at 0.5%. Canberra's dropped to 1.1%. Darwin, which was 3.4% a year ago, is now 2.9%. So the general message there is vacancies in most places are tight and falling. Sydney is a bit of an exception. Righto, Cheryl has joined the broadcast, and your questions: what are your thoughts on Dubbo? Investment spend, growth, yeah. Well, coincidental that you should ask that question, Cheryl, because I was just looking at Dubbo a little bit earlier for a particular reason. I was writing something for one of our reports, and I was focusing on the route that's going to be taken by the Inland Rail Link. And this is an important piece of infrastructure that investors might take some notice of and perhaps exploit by buying real estate in a regional centre in New South Wales. Yes, Cheryl, it is a sign. It's very coincidental. Great minds think alike. I think one of the great strategies in real estate is buying real estate that lies in the path of progress. So, and transport infrastructure, new transport infrastructure is one of those forms of progress that if you have strategically located real estate, you can benefit from that new infrastructure. The Inland Rail Link is underway. It's not just a political hot air, they're actually doing it. And Narromine, just outside of Dubbo, is one of the places where the route's going to go through, and government officials are right there right now negotiating with landowners between Narromine and Narrabri further north, talking about the potential purchase of land to create the corridor for this new Inland Rail Link. So Dubbo, which is already a pretty steady place, solid market, and I'll give you some figures in a moment, Cheryl. I like Dubbo a lot. I've been a fan of Dubbo for quite some time. It's one of those really steady, growing, diversified regional centres that's affordable, has great rental yields, keeps on chugging along, showing steady growth. But I think investors should be more interested in than they generally are. So in the last 12 months, the median house price for Dubbo has risen 5 or 6%. Its long-term growth rate is similar to that, 5 or 6% per year for the last 10 years. Median house price right now, $375,000. So it's still affordable, but it's been growing sort of not massively. It's not a boom market, but it's a very steady market. And that's what I like about places like Dubbo. They just keep on keeping on. They seldom have major booms, but they seldom have major declines either. Typical rental yields about 5%. lots of turnover, lots of good things happening in that market, and the inland rail link would just be another factor. So I think it's a market, excuse me, to show interest in. If you've got a broader portfolio, it's good to have a location like Dubbo in your portfolio, because it's always going to be steady, I think. There'll always be demand in a market like Dubbo because it's a very strategic and important regional centre, and it's a regional centre for a broad region of New South Wales. You know, it's at the junction of major highways, it's on the rail line, it's going to be close to where the inland rail link is going to go through, it's got an airport, very strategic. So yeah, good place to consider. Shen says, I'm looking to liquidate a house property in Victoria, move funds to Western Australia. Any recommendations where to spend in Perth? I think they're probably 600,000 or 700,000. Well, the first thing that comes to mind, Shen, is the Joondalup area. Very good precinct in Perth. The Perth market, I think, has been showing signs of recovery over the last 9 or 12 months. I think that recovery momentum in Perth kind of stalled in the lead up to the federal election, because that was a factor across the nation. Property consumers just stopped because of the uncertainty that's always created by a federal election, particularly the one we had recently, because it looked for all money like the Labor Party were going to win and introduce their very unhelpful policies on negative gearing and capital gains tax. And so that gave pause to people who are thinking about doing something in real estate. And Perth's recovery paused, but it's still very much a happening thing. Vacancies have dropped a lot, rents are rising again, and in some areas prices are rising a little. We're seeing, you know, activity pick up, so I think we're going to see better things in Perth as we go forward. And I do like that Joondalup precinct up in the north of Perth. You know, Joondalup is a centre there, which is like a CBD for the northern suburbs of Perth. It's got so much infrastructure there. University campus, major hospital, transport interchange, government offices, you name it, everything that people sort of want, you know, big retail. There's lots of reasons for people to go to that Joondalup CBD centre. And around it's a cluster of suburbs with median prices in, say, 500,000, 600,000. It's been a market that's been amongst the Perth precincts, one of the ones that's been most resistant to the downturn that Perth's been through. Well, Sydney and Melbourne have been booming. Perth's been going the other way for local economic reasons. But the Joondalup precinct has been resistant to that, and it's now showing more signs of a recovery than most parts of Perth. So that's one I would consider. Peter is asking, what are your thoughts about suburbs in the north of Brisbane, but within the Brisbane metropolitan area? Yeah, well, this, again, coincidental that you should ask that, Peter, because I've just been looking at that area recently for various reasons. The most active market, there's two parts of northern Brisbane worthy of commentary, I think. First is the northern outskirts, the outtering areas, the Moreton Bay region local government area, the cheaper areas, you know, Caboolture, Launton, Petrie. There's one precinct, and then you're heading out to the Redcliffe Peninsula, which is another precinct in that local government area. There's lots of affordable real estate, good suburbs, good solid suburbs with median prices in, say, the 400,000, somewhere in the 300,000s. Rail links, just good basic infrastructure in those places, good retail offering. There's a new university campus happening in the Petrie area. Big retail up there, IKEA, Superstore, etc. Some major jobs nodes. There's a lot to recommend that area. And then we're a little bit closer to Brisbane, what we might call middle market Brisbane, is what we call Brisbane North Side, the northern suburbs of the Brisbane City Council area. So these are more expensive places, you know, median prices, 600, 700, 800,000. Lots of good, solid suburbs, good real estate. Lots of people like to live there. It's Brisbane's middle market, very solid. And whereas the generalised data published by organisations like CoreLogic tend to tell us that Brisbane hasn't shown much growth in prices at all in the last 12 months or the last couple of years. When you look behind the generalised figures, you find individual precincts that have done a lot better, and the Brisbane North Side one is one of those, which has done a lot better than average for Brisbane in the last 12 months. A number of the suburbs in that Brisbane North precinct have had median house price growth above 10%, and so I just think it's a good solid precinct that's got what I'd like to call good bones. Many of the suburbs there have good bones, just good real estate. People in that middle market like to buy and live there, close to there's schooling, big jobs nodes. The biggest jobs node in Brisbane is the Australian Trade Coast precinct, which surrounds the Brisbane Airport and the Brisbane Seaport, which are quite close together. That's important. You've got the Gateway Motorway, which links north to the Sunshine Coast, south to the Gold Coast. That's important. A lot of those suburbs have rail links, commuter rail links linking back to the centre of Brisbane. Lots of reasons for people to want to buy there and live there. So, Peter, good places to consider. Anne is asking, I'm wondering how Ipswich is progressing in growth. Look, I think Ipswich, I'll go back a few steps. Ipswich in the past has been one of the leading growth areas of Brisbane. 5 years ago, if you did a survey of which suburbs of the Brisbane metropolitan area have had the best long-term growth rates, most of your top 20 would have been suburbs in Ipswich City. Since then, it's kind of meandered along, hasn't done much. I think it's poised for another phase of growth. It is the most affordable part of the Brisbane metropolitan area property market. Still suburbs with median prices for houses in the 200,000s, but more common is in the 300,000s. Motorway links out there from central Brisbane out the Ipswich motorway up to downtown Ipswich. Rail links as well. But the thing I like the most is the number of big jobs nodes. People like to live, whether they're renting or buying, close to where they work. And there's some very major job nodes, and there's emerging new ones, and the existing ones are growing. There's lots happening out there. Lots of big businesses that need a big footprint, like big warehousing, logistics types businesses like to go to places like Ipswich, A, because the land's much cheaper, and B, because the transport links are good, motorways, rail, etc. So lots of jobs nodes evolve out there. It's also got a RAF base, which is large, significant, expanding, $1 billion in the process of being spent, expanding the RAF base Amberley, which is on the fringe of Ipswich. There's a couple of major master plan communities that are works in progress. Springfield's been going for over 15 years and still going, and it's got a lot to offer now. It's got a university campus, a private hospital, rail links with stations, so people can jump on a train and get to the centre of Brisbane from Springfield. Business precinct, major shopping centre, lots. It's a big jobs node, as well as a place where people can buy modern housing in a pleasant environment with lots of amenity, with median prices in the 400,000. So Ipswich offers all of that. A good place to consider. I think it's going to show some growth. So I'm very happy to see that people tonight are asking questions about places, A, that I know quite a bit about off the top of my head, which is always handy, and B, that I think are really worthy of consideration by investors. Shen, looking forward to your Perth report, by the way. I recently published an update of our top 5 Perth hotspots report, Shen, so that's available on the hotspotting website. It does include the area I talked about, Joondalup, but there's 4 other precincts that we also focus on in that report, including 1 or 2 new ones we haven't featured before. There's going to be, it's a good time to consider Perth because prices are down. That market hasn't shown growth for a number of years. In the past, Perth has a history of being a national market leader on growth. It's just that it's hasn't done so well since the resources investment boom went south, but it will come back. and it will show growth. And now is a good time to consider buying with prices down and competition at low levels. Speaking of areas that have been down, and people are wondering when's it going to show some signs of recovery, and I get asked about this one pretty much every week in some form or other, including every time I do this live Q&A. That's Gladstone in Queensland, not so far from where I'm currently sitting, because right now I'm in Mackay in central Queensland, and Mackay has been leading the recovery of the central Queensland markets. Gladstone is not as well advanced as Mackay. Mackay's a more diversified economy. That's one of the strengths of Mackay, and it's well hooked into the resources sector. It provides a lot of services to central Queensland mining areas, but it's got other things like agriculture and tourism and logistics, construction, and recently it secured one of the major Qantas Pilot Academy training setups. They've been awarded that. They've competed against lots of regional centres around Australia. Mackay has been awarded it, and that's a coup from Mackay. That's a new industry for Mackay, aviation. Gladstone, not as diversified, but also Gladstone really got smashed more than most places with oversupply, because at 2010, 11, 12, it was a boom town because of those 3 big gas projects. But developers just piled them there and just completely smashed the market with way too much supply. People clearly weren't thinking clearly. They weren't, it seems like everyone was acting in isolation and failed to notice that just over the back fence there were 100 other developers doing exactly what they were doing. Suddenly we had way too many houses and apartments in Gladstone, even despite all those workers that were in town for the big gas projects, most of whom weren't actually renting local accommodation, they're actually staying in workers' camps. So Gladstone has taken a while to recover, but vacancies have come down. While I'm talking, I'll just try and see if I can find some figures on some of the Gladstone suburbs. We've just published the latest edition of the Price Predict Index, the winter edition. And for that, we do an analysis of every town and suburb in the country. We look at sales volumes and patterns of sales activity and price trends. And there was evidence of some improvement in Gladstone in terms of both sales activity and prices. Now, Daniel, I've just called up, as an example, the suburb of New Auckland in Gladstone. And according to the CoreLogic figures, the last 12 months, its median price has increased 3%. Now, there are a few suburbs like Gladstone showing those sorts of figures now. So this is the first time we've seen any of the suburbs of Gladstone showing annual growth in the median prices for, 5 years or more. So this is the first really strong evidence that that market is starting to mount a bit of a comeback. So the median price in New Auckland is now 310,000. It's still lower than it was, all those years ago, but it's heading back in the right direction. So that's not a bad sign. Just trying to think of the names of some of the other Gladstone suburbs. So that 4680. Clinton is another suburb in Gladstone. And according to these figures, its median price is no change from 12 months ago, which in itself is encouraging because it means it's no longer falling, which is what it's been doing for a number of years. So I think, if I caught up, more and more suburbs there's another one, just a moment, see what this one tells us. Too smaller suburbs actually to have any data, that one. Just bear with me. West Gladstone, what does that show? Okay, West Gladstone, its median house price has risen 1 or 2% in the last 12 months. So yeah, there's a bit of a pattern there, I think, Daniel. I've called up 3 suburbs of Gladstone, and I know this to be true because we looked at it quite recently, but just confirming that some of the suburbs of Gladstone at least are either showing small increases in their median prices in the last 12 months or no further decline. We also know that vacancies have dropped a lot. They were above 10% a few years ago. They're now down around 3%. So things are improving. If you own property there, Daniel, it's been tough times, I know, but it does appear that the recovery is underway. It's taken a long time to get there, and people owning those had to be very patient. But I think things are improving, and it's part of a trend for Central Queensland. Mackay is definitely a strong market now. It's rising. Rockhampton is showing signs of joining that trend. Emerald is definitely rising again. Even the coal mining town of Moranbah, which dropped a lot from its peak, but it's now sales activity is picking up, vacancies are down, and we're starting to see prices rising again. So the trends generally are pretty good. So there's hope for the future there, Gladstone, even if it's not dramatic yet, and it may take some time to get back to those former levels of where they were at, say 2013, but starting to head in the right direction. Okay, so keep those questions rolling in. Seems to be a little bit of the technology isn't perfect, let me tell you. While I'm just waiting for more questions to roll in, I've got some other things that I thought I might talk about in these down moments. I was doing a webinar broadcast with a buyer's agent last week. And one of the things we're talking about is one of the myths of real estate is that you've got to buy the prime suburbs, the premium suburbs to get the best growth. You've got to be close to the CBD to get the best growth. You've got to be in the big cities to get the best growth. These are all fallacies and misconceptions. Just to illustrate a point, I just did some numbers on what's happening in Melbourne recently. We've seen Melbourne have 4 years of boom, and then we've seen them have maybe 18 months or a bit more of downturn, price correction. Now, the areas that have dropped the most in this price correction phase, which incidentally appears to be over, now markets are starting to bottom out and nudge upwards again. Certainly auction clearance rates are improving, and sales activity is picking up. People are competing for properties. We're seeing evidence of prices starting to nudge upwards again. But over 12 months, prices are down the most in those prestige suburbs. The top end areas are the ones that have shown the greatest decline in prices in the last 12, quite massively, in fact. Like Toorak is the swankiest of the prestige suburbs of Melbourne, median house price well above 3 million. Not as high as it used to be, because in the last 12 months, the median price in Toorak has dropped 30%. Hawthorn's dropped 34%. St Kilda, well, not quite as swanky, but it did have a median price above $1 million, but not anymore because it's dropped 37%. Various others, Canterbury's down 20%, Brighton, median price $2.5 million, it's down 21%. And the long-term growth averages now for these places are just sort of 3 or 4% a year. Whereas if you look at the outer ring areas of the Melbourne metropolitan area, places like Melton, much maligned Melton way out west, these places haven't had any price decline. Their median price is still higher than they were 12 months ago, and their long-term growth rates are much, much better. Same for the Cranbourne suburbs down in the far southeast, Epping up in the north, Rosebud suburb down on the Mornington Peninsula. These are places that outer ring Melbourne, much cheaper than the prestige areas, but most of them, they haven't had any price decline. Their rate of growth has come back, not as fast or as high as it used to be, but prices haven't dropped. And their long-term growth rates much, much better than the prestige areas, compared to Toorak's 3.5% per year over 10 years, whereas Melton South is 8.1%, Cranbourne North is 8%, Sunshine North 7.6% per year. So, you know, I mean, that's just a snapshot of Melbourne, but, you know, this is the sort of thing that I've researched many times over the years and often found that the areas with the best long-term performance and percentage growth are actually the more affordable areas, not the prestige ones. Okay, things seems to have been frozen a little bit here. I don't know whether things are still happening, but finding that that's not scrolling. Just a moment, I'm going to try something else. And that's not helping me very much. Look, I'm sorry that my screen seems to have frozen, and the feed, which is supposed to be bringing me the questions that people are typing in, just isn't happening, which is pretty bloody annoying, really, because I'm ready, willing, and able to answer any questions that are coming through. I'll just keep talking about random issues, and I hope that something positive will happen with that. Yeah, my laptop computer here in my hotel room in Mackay is being really unhelpful. Okay, that's a bit better. Okay, I'm going to talk about some of the things that are going to be featured in the upcoming edition of the Week in Real Estate, which is something that we publish at Hotspotting, send it out to our database of customers every Saturday morning. One of the stories comes from the REA Group, which owns realestate.com.au, talking about the fact that there's actually very little stock on the market at the moment, but there's lots of buyers competing for what's available, particularly in Sydney and Melbourne. So we're seeing strong competition for properties, high clearance rates, and making the point that a lot of vendors are waiting for spring, which maybe doesn't make any sense. It'd be better to actually list now rather than wait for spring, because in spring everyone's going to list and suddenly there's going to be lots of competition from vendors, whereas right now there's very few vendors, but lots of buyers. So now might be a better time to be in the market as a vendor than kind of waiting for what people assume would be a stronger time to sell. There's a few myths out there about spring being, you know, a great time to buy, a great time to sell, etc. It can't be both. It's got to be one or the other. Anyway, that's some information that's been published this week by REA Group, which has realestate.com. There's also some information or some analysis, a forecast from the Australian Construction Industry Forum, suggesting that because the level of building of new construction of dwellings across Australia has dropped so much, particularly apartments, that we're going to end up with an undersupply, they're suggesting, and that may put further pressure on prices. We're already seeing a number of things have happened in Australian markets, or in the background of Australian markets recently, interest rate cuts, APRA changes, etc., leading to an upturn in activity and sentiment, and I'm suggesting against that background the lack of new construction is going to mean that prices may be rising more than otherwise would be the case. There's also information in the upcoming edition of the Week in Real Estate, what we call the Wire, that the lending data most recently published by the Australian Bureau of Statistics shows that both loans to owner occupiers in particular, but also to investors have risen. They rose in June compared to May by about 2%. Loans to owner-occupiers were up more than to investors, but it's the first time we've seen an actual increase in loans to investors for a while. So that's more evidence that markets are, generally speaking, picking up. We also have a story on the vacancy rates, which I just referred to, where most of the capital cities have very tight rental markets with low vacancies. Sydney is an exception. And finally, we have a story about somebody did a survey to ask people, and Finder, in fact, the comparison website, did a survey asking Australian consumers what the official cash rate was, the official interest rate, and found that most Australians haven't got a clue. Very few were able to accurately say what it was, and many people were wildly out, had no idea what it was, and they're suggesting that it's very important to know things like that, because you really need to know, A, what the cash rate is, and B, what your interest rate is, the one that you're paying on your loans, and what's actually out there in the market, because too many Australians aren't aware of even the interest rate that they're paying on some of their loans, and the fact that they can actually be doing a lot better. So the general theme is that if you're paying, if your interest rate doesn't start with a 3, then you're paying too much. And if it starts with a 4, you're paying more than you really should be in interest rates, and there's the opportunity to go to your lender and negotiate to have your interest rate dropped, and if they won't, then refinance with someone who will. So that story is also in this week's upcoming edition of The Week in Real Estate, which we send out every Saturday to all our subscribers to our Wire newsletter. Look, I'm not sure why this is frozen. It's just not giving. Oh, hang on. Now it's moving. Thank you. At last, the feed of questions has come through again. So I'm sorry for that delay, but the technology is being a bit unhelpful, as it so often is. I think they do it deliberately just to mess with our minds. So Peter, you have another question. What's your opinion of the Sydney market? Well, it's a pretty broad question, I have to say, Peter. It's a big place, Sydney. Lots of different things are happening. So here's my take in simple terms. We've just analysed it for the price predictor index. There's different scenarios playing out. There's not just one situation in Sydney. The general trend has been down. Lots of decline market, but there have been areas that have shown a high degree of resistance to the downturn. The Northern Beaches area has been very resistant, but in particular the absolute top end, and this is completely opposite to Melbourne. The suburbs of Melbourne that have fallen the most are the top end suburbs. But in Sydney, the top end suburbs, those places with median house prices above 2 million, their pricing hasn't dropped in most cases. There's also evidence that apartment markets have held up better with pricing than housing markets in the same suburb. Many suburbs where the median house prices dropped a lot, but the median apartment price hasn't dropped, and in some cases has risen quite steadily. So all those different scenarios are happening in Sydney. Some markets should be avoided. I think around Parramatta, the Parramatta local government area is one of the areas most in decline, where vacancies are highest. The Canterbury Bankstown local government area is also one where it's got a lot of decline markets, but others, Blacktown out west is very steady. The Northern Beaches I mentioned is held up very well. And we're now starting to see signs of turnaround. There's no doubt that the Sydney market has bottomed out, that we're starting to see median prices start to nudge up a little bit. Clearance rates are obviously improving, partly helped by the fact there's so little stock on the market. But there's plenty of demand for what is available, and that's starting to push prices up again. So improvement in Sydney, helped by all those fortunate events, the election result, the APRA changes, interest rate cuts, etc., etc. So things are improving. Okay. How is Gladstone looking for rentals? Look, Cheryl, I'm not totally sure. I have seen some evidence that rents are starting to nudge upwards against in Gladstone because vacancies are no longer huge. They're down around 3%, generally speaking. So once you start to get down to 3%, the market's sort of in equilibrium. Once it gets a little bit low 3%, like in Mackay, where I'm currently sitting, the vacancy rate is 1.4% and rents are rising quite strongly, and there's people competing for available rental properties as tenants. That scenario isn't yet evident in Gladstone, but it's maybe not too far off because the situation has improved. Michael, from all your research, which areas will have the highest growth in the next 24 to 36 months in low yields? If you know of any with a decent high yield? Well, most of the places that are currently growth markets actually don't have very low yields because, Michael, most of the markets where growth is happening, where we expect growth to be happening in, say, the next 2 to 3 years, are the smaller capital cities and regional areas. Right now, there are growth markets right across Australia. We're not hearing about them. Media keeps talking about property prices falling across Australia, until recently anyway. And it simply isn't true. Mackay, I'll mention it again, I'm sitting in Mackay. It's a growth market. Prices are rising in Mackay. The Sunshine Coast, where I live, prices are rising there as well. Dubbo, prices are up 5 or 6% in the last 12 months. It's not a boom market, but its prices are rising. Same in Orange, Bathurst, Wagga Wagga. Lots of places in regional New South Wales have rising prices. In Victoria, perhaps more so than anywhere else in Australia, Ballarat, Bendigo, Wangaratta, Albury. Look, there are growth markets across the state of Echuca is another one, Shepparton, but particularly those places that are closest to Melbourne, Ballarat, Bendigo, and all those sort of hill change towns north of Melbourne, like Kyneton, Broadford, Wayland, Kilmore, those sorts of places. You know, these are growth markets, and they are much cheaper to get into than the capital cities, and the rental yields are much better. So that's where the growth is happening. I expect there to be good growth in parts of the Brisbane market, parts of the Adelaide market. I think Adelaide's going to surprise people. Very affordable, pretty going to do. And now, it's telling me that the connection has been severed. Okay, so I'm getting confusing messages on my screen again about poor wireless connection. The video has been paused, but I'm really not sure what's coming through. I'm going to assume that it's still happening despite the message I'm getting on my screen, and soldier on, because technology is definitely not my friend tonight. Question I'm being asked is about Cremorne Point by Andrew. Just give me a minute, Andrew. I'm going to see if I can get up some figures on that market, and I hope that this is coming through. I can still see myself on the screen talking, but I'm getting negative messages on the screen about the video being paused, so I don't know. It's just one of those nights. Okay, Cremorne Point, Andrew. According to these figures from CoreLogic, the median price is about 3.5 million. It's down 14% in the last 12 months. That's for houses, but there's only been 11 sales, so that's too small a sample for those information to be really of any use. It's more of a unit market, it seems. Expensive units too. Median price 1.27 million, down 8% in the last 12 months. But in the last 10 years, it's grown on average 8% a year, despite the recent decline. So it's been a market that's performed well, just not in the last 12 months, or probably in the last 2 years. Rental yields about 3.1%, which Sydney standards ain't too bad. But a small market, like a lot of Sydney, affected by the recent decline in activity and prices, but the evidence is that Sydney generally is turning around. It's bottomed out. A lot of different commentators are making that point about Sydney, and yeah, the evidence suggests that market's on the way back. Look, just seems to me that I'm really struggling to make this broadcast work in the circumstances. Not in my normal office, working with the normal equipment. The evidence is the wireless connection here in the hotel is not as good as it could be, and that the broadcast has been affected by that. I'm going from almost an hour anyway, so look, I'm going to face facts and call it today. Sorry, it's been a little bit disjointed tonight. I did get the opportunity to answer some questions. I'll go to the Facebook page and in writing answer some of the questions that I did get to because of the problems with the technology, the freezing of the screen, etc., etc. So sorry about that, but we'll be in a better condition to do better this time next month when we do it again. And there will be other broadcasts. Tomorrow I'm going to do the war on misinformation, next Tuesday evening, hotspot of the week, etc. I might actually reschedule this Q&A, have a sometime next week, perhaps try again when I'm back at home base and things are more under control. Okay, so for now, Terry Ryder signing off. We'll try again soon.